Hello, Culture Matters podcast. I'm so excited to introduce you to our guest. Before I do, here's a quote just for this episode. The strongest of all warriors are these two: time and patience. Leo Tolstoy. Our guest today, friend of the Culture Matters podcast. I've had the opportunity, the pleasure of having coworkers of our guest on the Culture Matters podcast and being a client of their amazing firm. They have over 20 years of institutional experience in and around the financial markets. They are the author of The Morning Core, which I'm subscribed to, where they're sharing information that is easily digestible by retail investors around investing, wealth building, retirement planning, the capital markets, and the like. And they are the chief strategy officer of Pine Valley Investments, a good friend of Mike Modica, Noah Modica, been on the show, Culture Matters. And I'm so excited to have you, Nick Lampone. Thanks for coming on the Culture Matters podcast today.
Jay, thanks for having me. Really appreciate it. Listened to the podcast for years now, so just happy to join you on here.
Wow, I appreciate that. Thanks so much. I am curious, you've been in the business of finance, of trading, of equities. We'll get into all of that now, from institution to retail investors. And were you thinking about doing this young? Like, was it, did you have dollar bill portraits around your bed and people's financial well-being, or did you want to own laundromats like me when you were a kid?
You know what I wanted to do, quite honestly? I knew I wanted to make money, and it was anything and everything to figure out how to be a businessman. And
Hmm.
this just kind of happened, and had some friends in the business that I knew very well. Good friend's father had been on Wall Street. And, it was a funny story where he's like, "Hey, Nick, I'm going to college." And he said, "All of our friends want me to get them a job." I said, "Oh, really?" He said, "I think you'd be perfect for this role." And it was as an institutional equity sales trader. And that's how I got my first entree into the business.
Now, I did see the Vanguard early on.
Yeah. So
Was
it was
that the
Vanguard.
Vanguard that I read like these books, like these Bogleheads and so on? The
That was it.
Vanguard that our listeners might have read some of their books and heard of that Jack Bogle's, I think, his culture and all that.
Jack Bogle. He's a legend in the industry in
But at
index
that time,
investing.
how big was the company that culture at that time versus like what it's become all the way today?
Oh, yeah. It was I wouldn't say it was in its infancy, but it definitely is not the behemoth that it is today. But that's where I got my start in the business, to get experience, uh, learn about the industry, get licensed, and then that allowed me to move on to Wall Street, onto the institutional side of the business. But it
What
was
are
a good
some
start.
advantages? Yeah, like some advantages to learn in that context and then go institutional that's been very helpful today, or if at all.
I always give advice, even when we have interns in our office, my own children. I think you want to work bigger the firm, the
Hmm.
younger you are, I think the better it is. Just gives you that experience. They usually have a very structured process. They've done it a million times. They're not onboarding one or two new employees all day, every day. They have a huge infrastructure in place with HR, um, training modules, whatever it may be. So I always think it's a great idea for people to go to a larger firm when they're young,
Hmm.
get that experience, and then sometimes, hey, that may be the right fit for them and they really thrive in that environment. Or some people are like, man, I really don't like this huge corporate grind. I want to do something, a smaller business, startup, et cetera. But I think that basic experience really helps people longer term.
For our listeners, every listener is managing their personal finances in one degree or another. Or if you see otherwise, I'd love coaching on that. But what's a trading desk for like the retail? I mean, we should define some terms here. Like, what is even a trading desk? what is even a retail investor for like the general populace that are listening to our show?
Right. So a retail investor is most of the investors that are out there. Institutions or, hedge funds, mutual funds, pension funds, those larger corporations, for lack of a better term, that are investing capital, millions, billions of dollars. On the institutional side, I worked on an institutional trading desk, right? So I covered some of the largest institutions in the world. When the portfolio manager of that institution wanted to buy 5 million shares of IBM, he would give that order to his trader, which is a buy side trader. And then that buy side trader would have one of the sell side firms execute that broker. I was hoping to be one of those guys. There were 200 firms and traders they could go to on the sell side. I wanted to be the one that they gave the order to. So that's how it worked. And,
Wow,
how do you get that order, right? So there's a
that's
lot of reasons
fascinating.
for it. Um, so my role was an institutional equity sales trader. I think it's the perfect title for what I did. I covered institutions, I traded equities, I was a salesman, and I was a trader. So you have your set accounts. Maybe I covered 25, 30 institutional accounts. They're the only accounts I covered. I serviced those accounts all day, every day. Some of them did a lot of business with me. Some of them didn't do a lot for whatever reason, but you're cultivating those relationships. You're building that trust. Oh, and then by the way, you could be the greatest guy in the world and very trustworthy. But if you're not a good trader, they're really not going to want to give you the order. So you had to tick a lot of boxes in order to be successful in that business.
What are were some whether it was yourself or others even that you worked with as well, activities or rituals that make someone a great trader that made people great at what they did?
We always talked about, I think one of the big keys was being a little insecure, right? On Wall Street, everyone's very confident. Everyone thinks they're the best. Who went
Mm.
to an Ivy League school, wherever they went to, however they grew up. I think insecurity is key, right? We didn't work on a big salary and a bonus. We were commission only, where I worked for the most part, most of my firms. You come in every day, you start at zero. Okay, how am I going to get orders today? And I think that insecurity breeds a little bit of a work ethic. Come in, work hard. Nothing's given to you, even though you had a great
Mm.
day yesterday. You had nothing coming in the next day. So it's like, okay, how can I work for the clients? How can I do a good job for them? And then build out the business from there.
What were the clients looking for? Right. That 25 to 30, I think there's so much there from a relationship building standpoint, culture, customer service. Like you said, how can I work for the clients or work with the clients?
Right. You're giving them color all day, every day. There's specific stocks they like, they're trading in. Um, there's research around it. There was institutional research that we're disseminating to clients on a regular basis. So
Wow.
there are a lot of different aspects to it. And then at the end of the day, you needed to be a good trader, right? Because think about it. If you're trying to buy 5 million shares of a stock and someone finds out about it, they're going to front run that order, right? So there's information leakage out there. If someone knows, hey, Nick's got a big order in IBM, somebody else is going to front run it. So trustworthiness really comes into play where you're not letting anyone else know that you have that order other than specific people that need to know. And that was always a big part of it. Now there's algorithmic trading, everything else, but it was information leakage was a big part back in the day. And it still is even now with algorithms where they'll trade certain algorithms. They don't want information leakage. They're always trying to find out who's out there buying stocks. And then you'll see, you know, the algos try to front run those.
If you were to say like core values that uh represented the best mix of value to the client, success of the trader. What are some important core values in that experience that you'd say
I
stuck out
mean,
to you at the different?
it's like I said, it's trustworthiness. I think you needed to have an understanding of the market, individual stocks, how they trade. But I think you also needed to have street smarts too. I think that really matters, right? You see, I always talk about it
Mm,
in the morning core where a sell side analyst does a ton of research and builds a model for a stock, and that's great. But if that analyst has no idea of the understanding of how stocks trade and what
mm.
makes stocks move, then it's worth that research is worthless. So I think it's both sides, understanding the stocks and the fundamental analysis, but also being a little bit street smart, understanding the market. I always talk about it in the morning core. Market's a living, breathing animal. It lives every day. You have to see those ebbs and flows. And I think as you see it over the course of time, it's really through experience that you understand it.
Something that you reference in the morning core about price and fundamental, price leading fundamental. Is that something to
That's
there's something to
exactly
that
like
effect? Okay, I would
there's
love to
always
unpack that for the
there's
listeners.
always something. I mean, we have conversations all day, every day. Hey, why is XYZ stock up 4% today? No news out
Right.
at all. Or you'll see a stock up 2% a day for a week, 2 weeks. Stock just had a 12% move. There's no news out. What's going on? That's what we
Oh,
talk
interesting.
about. That's the price action. And then more often than not, you'll see something come out later where the news is, hey, earnings were good, or they won this contract. Business is going really well. So like that's something you want to look for. All right, how's the stock acting?
Oh,
Acting good. It's acting well. Okay, now I really want to keep an eye on it and then see if the fundamentals follow after the price
oh,
action.
this is interesting. So, like, there's a quote: "Tiny hinges swing big doors." So, in the sense that if you there's some activity that there, but there's no macro news around, you're paying attention and asking questions to figure out what could this mean, if anything at all.
Yes. And does someone know something? Right? Because efficient market hypothesis, everybody knows everything. Personally, I don't think that's the case. Sometimes, some people are smarter, more perceptive, pick up value more than others.
Mm,
So you're always looking for that little edge. Hey, what's going on in this? Why am I paying attention? You screen for volume. That could be a screener. Hey, this stock's up on higher than average volume over the last 2 weeks. Boom. What's going on there? So you're always looking for what's happening, looking for little signals out there because, that's part of the edge.
were you always was writing always a component of your I guess process or ritual for developing competency? Because you put a lot of work into this morning core. This So was that always a component of it, or did that evolve
Absolutely
over
not.
time?
Yeah, it evolved over time. We got in, some people you worked with, would write news synopsis of clients' research notes. That was 20 some years ago, kind of showing my age here. Been in the market that long. But no, it just evolved as I transitioned over to the retail side, registered investment advisory firm to where it's okay. I come in every morning at the same time. I'm a creature of habit. I'm in by
Hmm.
7 a.m. That's just how I operate. That's what I like to do. And it's okay, what's going on this morning? And then as I'm taking notes for myself, okay, well, now I'm in this environment where a lot of our clients, don't have the background that we have. And it's okay, maybe you could pass this on. And you spoke about it earlier. Sometimes I think, especially financial advisors, try to make things sound more complicated than they are, maybe to make themselves sound smarter. So it was a way for me that I just started doing it to try to make
Wow.
things easier for retail investors. Try to, And you're not dumbing anything down. You're just trying to explain it in simpler terms. Hey, this is what's happening here.
Hmm. What is a registered investment advisory for our listeners that don't know that terminology, and that may be important for them to understand that when it comes to their personal finance?
Right. So registered investment advisory firm is what Pine Valley Investments is. We service retail clients. Could be high net worth, could be individuals, could be corporations. Um, they come to us, they sign up. We actually custody at Charles Schwab, but they give us investment advisory discretion on their account. So if I have a client that says, "Hey, Nick, Pine Valley doesn't take custody of the assets. Most of our assets custody at Charles Schwab," but they say, "Nick, I know you understand the investment business. I want to build a plan to invest for the long term." Sit down with the client, and they give Pine Valley Investments discretions to manage their investments on their behalf.
What are some of the benefits of that methodology for retail or other customers versus some of the other options out there in your estimation or in the firm's estimation?
I think the biggest thing for us at Pine Valley Investments is that we're independent. So we're not affiliated with anyone. We are truly agnostic on the tools we utilize to invest for clients and how we do it. We're not beholden to anyone else. Listen, I'm sure large firms have an advantage over an independent firm. But for me and our clients at PVI, we want to have control. We don't, we get paid on, assets under management. We charge a specific fee. If the client does really well for 3 years, we're going to participate in that. The client does poorly, our compensation goes down. So the goals are aligned there. Whereas we're
Mm,
not trying to sell a specific product that maybe a bank is pushing and they're going to give their reps, an extra percentage payout on it. There's always things like that in the background, but it's upfront, it's completely transparent. Here's the fee you pay. Our goals are aligned, and we're not beholden to anyone. And I think that's the beauty of the independent firm.
what are some uh, consistent uh, habits or behaviors that everyday entrepreneurs, executives, employees, like our listeners in personal finance may be doing that sabotage their wealth building activities, whether they're doing it on their own, they're doing it even with a partner like yourself. I'd love to even segment those and speak to both, but just
Yeah.
some, maybe we'll start with the first one. Right now, our listener doesn't have anyone other than themselves that's managing their accounts. What could be some self-sabotaging behavior that you've seen throughout your tenure, you write about in the morning core, you hear about down the hallway?
So
That,
it's
yeah.
emotion. It really is emotion. I think people tend to get emotional. Behavioral finance studies show a loss is 2 times as painful than a gain. So if you make 10% on a stock, that's great. Okay, move along. If you lose 10%, it feels like you lost more than 20%. So I think eliminating those emotions are very key. I think people think more short term than long term. Hey, I think the market's going to do well, but I think it's going to be a little bit weak for the next month or two. So I'm going to wait and see and maybe try to time that investment. Um, when you try to time investments, you have to make two right decisions, right? We always say people have to time to sell and then time to buy again. So I think
Mm,
people, you know, focus on the near term, whereas if you do the financial plan and focus on the long term goal, that really, really eliminates that day to day noise. I know we've seen I always show a chart when I present. You know, political space has become very important in
yeah.
finance in the last few years. As rhetoric on the left and right gets more heated, but really eliminate the noise and don't let politics get in the way of your investing.
Wait, so you mean I
the
shouldn't be choosing my investments based on, or this is not financial advice. Probably should have said at the beginning. We're not giving
yeah.
any financial advice, but now making a joke, right? I shouldn't be making it based on headlines.
No, not at all. So focus on the long-term goal, plan accordingly. Obviously, you can, every client is different. So, Jay, how we invest for you is going to be different than someone that's your age that has a similar amount of money because maybe their risk tolerance is different. Maybe you can take more risk or take less risk. So it's having that individual, that unique goal for every client, I think really matters because sometimes clients just get thrown in buckets. Okay, this person, this age, this is what they make. Okay, this is what they should do. No, every client's unique. You have to have those conversations all the time when you're meeting with clients if anything's changed.
What advice do you have? Because we have a lot of advisors that listen to the show, and even just entrepreneurs that are in sales and business, of course, right? But like how to approach those relationship building exercises to uncover people's actual wants and needs. How would you advise to approach that? Are you a big list person, checklist, questions? How do
I'm a
you?
checklist and listen well. I think that's the key. If you ask the right question and then let clients speak, you're going to be able to hear what they're telling you. It's not a straight checklist. Hey, give me A, B, C, D, but it's ask that question and listen, and then you'll understand if they start talking about their risk tolerance or, hey, this trade happened to me 5 years ago. I made this poor investment, whatever it may be. They're going to give you their experience. And then, we always tell clients, we're co pilots here. It's your money. You're making the decision. We're just riding right there beside you to make suggestions on what we think makes the most sense. We're never going to implement an investment plan without talking through with it to the client. I think that's the
Mm.
most important because when it's collaborative, not to use the word, but they are invested. They are part of the process. And then they understand a little bit more. And then as you walk through it, certain market scenarios, we've had a great run here. I think people got freaked out on the sell off Friday. I mean, we were down. We haven't had a 1% move in the S&P in a long time. 1% move. Everybody was freaking out. Pull up an S&P chart of the last
Mm.
6 months. It was a blip on the radar. So I think it's,
Mm.
talking through that and, those emotional biases, eliminating those and just making it a collaborative process.
For our listeners that might have, or maybe, yeah, been on the sidelines the last 8 years in the markets, what may they have gained or missed out on?
Well, you don't want to make anyone feel that bad if they've been sitting in cash for the last few years. So not going to rub it in, but it's really focusing on, we always talk about it. It's risk adjusted returns, right? I could have someone come to me and hand me a statement and say, last year I was up 34%. You know, I'm beating the S&P. Okay, great. How did you derive your returns? How did you generate those returns? And how much risk did you take to generate those returns? And I think that's what we want to educate clients about. Okay, if you want to take the risk and you want an S&P like return, then you have to take S&P risk and be willing to take that downside. And it's asking those questions of the clients. Okay, if the market's down 10, are you okay being down 15%? Or
Mm.
20%, you're down 30? Makes them think, oh, I know you want to beat the S&P 500 when it's up, but are you willing to take the downside because volatility drives the returns? Why do you get paid? Why does why do stocks earn more on average than bonds? Because of the volatility. You have to be able to withstand that volatility. And some clients
Mm.
are able to do it and some clients can't. And you see, the good thing for us is what we've seen in the last 5 years. We saw COVID, we saw 2022. You've seen V down markets, V up markets. So I think even in the last 5 years, not even talking about '08 great financial crisis or dot-com bust, even in the last 5 years, I think clients have had a good feel. How did you really feel during COVID? how did you really feel in 22 when it felt like everything was crashing down? And it's, you know, making them think about it to make those decisions on risk adjusted returns so that they're more comfortable sticking to their financial plan going forward. That's the key.
Were you at JMS during the global financial crisis? The Janie Montgomery
Yeah, so
stop?
I was a Janny in '08. Yep. Um,
What was that
felt like
like?
nothing will ever be worse. So, I talk about it. I'm still friends with a lot of people that work together and clients to this day. Thank God we can laugh about it. But '08 was the world ending, market down every single day, S&P 500 trading at 666. Um,
Oh,
you know, you needed a massive government bailout. Everyone was levered. Um, I think that's as scary. Listen, you can never say never. Obviously, COVID was insane for a ton of reasons, but I think '08, '07, '08, I think that's the scariest I'll see in my career. But it does give you, you know, you only learn from that experience. We have a couple of younger advisors, hadn't been through it. And then, the battle scars from COVID, think that helps make them better advisors. I also think it helps investors, gives them perspective too, longer term. So as painful as it is, I think that perspective helps longer term for both the advisor and the client.
yeah. What like s- core value or something positive that comes from a time like that, would you say from a uh, like in the cadre of relationships that you have from that time? Is there a thread line of like this there this is a gain from that, from a character trait or a
You find out who
philosophy?
your friends are very quickly, right? So '08 happens, firms go out of business. Um, hey, if some trader was on the buy side and he had 50 people like me calling him every day, wanting to take him out to Yankees games, etc., and he's out of a job, how many people are calling him 6 months later to see if he's okay, trying to help him get another job? So I think you really find out who your friends are during those times or who's just a business relationship. And I think that's the difference. I've been very lucky in my career, working with a lot of great people that been friends, 25 years now just through business and close personal friends. To me, that's the best part of all this. Best part of, you know, being an advisor now, a representative IRA rep, is working with the clients. That's what it's all about.
Hmm. How are you seeing, or have you seen uh the culture of advisor to client change and evolve even in the last handful of years? Has it? Is it the same? Are there disruptions that you're seeing?
I think technology, is the game changer, right? So I think as clients are more tech savvy, especially the younger people, but even people my age or older that are in there. So I think technology's changed it. Text messaging versus phone calls, even something simple as that, putting together proposals on the advisory side. So I think that's changed it. I think that's made us much more efficient. It's provided a better user experience for clients that I like. I would say the one change that I see, and I wish this were me back in the day, is how educated younger clients are now, right? So I'm of the age where, you know, I have a 28 and 25-year-old. Um, I have friends' kids, you know, talking to them. They are so educated already on what they should be doing, whether they're, have an internship in college, graduated college, just out. We're having these conversations on budgets. What should I be saving? How am I invested? I'm going to save in an individual account, Roth IRA accounts. I didn't even think of that when I was that age, when I was their age. And I think to me, that's the one thing that really impresses me, makes me feel good, is
Mhm.
how smart and educated these people are because they're seeing everything online via social media
Okay.
and they're not afraid to ask the questions, which is phenomenal. That's what you want to see. So I think think the younger generation's in very good shape.
I have a question on that, like more of a your thought on this stuff. When the access to information, when I first, I'll use me anecdotally. When I first, you're reading books, you're listening to podcasts. In the beginning, I I knew so little. I thought I knew enough. The more I read and the more I studied, the more I realized better get partners like you guys. So I'm curious what you're seeing from that like there's pros from the generation having more access. Maybe they're asking better questions. Maybe they're more interested or they can start younger. But like
All
I'm
all
curious if
of
you've
that is
seen
the
this
key.
phenomenon. I've noticed myself in the beginning. I knew enough that I thought I knew it, and then the more that I did study, the more that I realized, let me focus on culture matters. So I'm curious if you could unpack that because I don't think I'm alone in that hero's journey.
Absolutely. You're 100% correct. I think that is a similar experience for a lot of people out there. Okay, I'm reading this, I'm understanding it, I'm digesting it, but I know I don't know everything. Um, Let me have a conversation with someone at Pine Valley Investments, walk me through it, explain it in a little bit more detail, but they're smart enough to look into it. They're smart enough to know, hey, I should be doing this. They're also smart enough to know, hey, I want to outsource this to an expert. I always talk about that in my own life. If I need a floor done, I need flooring put in my house. Could I do it? Yeah. Is it going to be an awesome job? No. But why wouldn't I outsource it to an expert, have them come there, have them do it, look fantastic, and call it a day? And I can focus on what I'm good at. So that's my theory. And I think they're doing the same thing and they want to know more about it, which is just, I think it's incredible. And I think it's good longer term for that generation.
In your experience, like if you say the way that the most successful people with the financial markets think, like, is there a giant difference in the everyday listener that we could tap into? Like, is it just, how does one think that is able to really build that nest egg that we read about in these personal finance books versus those that just they for whatever reason that it didn't pan out for them? Is it just
I think
completely night and day different?
it's saving at a younger age and having these budget conversations are fantastic. And I think they understand, okay, the market's going to do what it's going to do, but I can control my spending and saving pattern. Um, they feel like they can control their career a little bit. Okay, where am I working now? I think Jay, you see it a little bit more where younger people move around more. They find out what they're worth. They're at a job two,
Yeah.
3, 4 years. Whereas my generation and generations older than me was you get the good job and you sit there and you work hard and it all works out. Where I think the younger generation is okay. This is great. What's next for me? And I think that's one of the things we do at PVI is we have a lot of younger people in the firm and they want to know what's the next step. Okay, I'm here now. How do I get to step B? And then how do I get here? And you have to show them a way because if not, you're going to lose them. They're very motivated. They work hard, but they want to see that pathway. And I think, whereas, my generation was, okay, great. I'm here. I'm going to work hard. I'll get recognized at some point and we'll see what happens.
Hmm. Wow. The um in the as far as the morning core, you and so every can our listeners, how do they subscribe to that? Is that something open general to the public, or is it
Yeah,
something just for PVI
it's open to
clients?
everyone. They can email me, Lampone at pinevalleyinvestments.com. Um, Sign up. I usually post it 2 or 3 days a week on X, probably 2 days a week on LinkedIn, but I write it 5 mornings a week, usually comes out
Wow.
around 30 Eastern time. It started, like I told you how it started, but now we built a following and people are really engaged with it and enjoy it. And I enjoy writing it. It takes a lot of time and effort, but to me, it doesn't feel like work because I'd be doing this anyway. I want to know what's the latest news. I'm always, we're always looking at economic charts, what's going on out there. So, it's just in my normal course of work. Okay, I carve out this time and can give it, literally we give it away because we want people to be educated.
Yeah, what are some of the feedback that people say that read it? Like what value they get from that?
I think that it's quick, it's easy, it's a 5-minute read. You can be as detailed as you want, right? So I give first part of my comments on what I think's happening. Then it's news headlines, a couple of articles that I find interesting. Maybe you may or may not find them, but I post them there. And then there are uh, economic charts at the bottom. So, maybe some people don't understand them all, but they look at them. But you could just read the headlines. It's a little something for everyone. It's what I like to say. You can go in the weeds as much as you want, or you could read my paragraph in the headlines and call it a day. It's, whatever value you get out of it is fine. It's fine by me.
You mentioned in the Morning Core a lot recently about artificial intelligence impact or non-impact on like the bigger picture. Can you just elaborate a little bit on that? Like, is AI um what impact is having that in the markets now? What opportunities do you have are you seeing or not?
Uh, it's been the full trade here for the rally. It's been, you see the capital expenditures, CapEx for these AI companies. And I said it this morning, Zuckerberg spending like a drunken sailor with Meta. That's where they
Yeah.
want to be. You know, Charts this week showing the CapEx spending on artificial intelligence. It's been massive. It's been a big boon. I do not know the full impact. I don't claim to be smart enough to know the full impact of how it will affect the economy, but I don't think we've seen, any really the effect of productivity gains yet. I mean, I think it's out there. People are spending money on it because they know it's important,
Hmm.
but I don't think many companies out there know how to use it effectively yet. I think that's probably the next phase of what happens here. And obviously you've seen the utility sector and data centers and nuclear energy, all those sectors, industrial sectors crushed it. I think utilities is the top sector this year. Who would have ever guessed? So you're seeing that play out now, but I don't think we've seen the next phase of it yet.
It's a very you mean in the sense, well, it's an interesting thought around um the person that may be desiring to have it may not yet have the education necessary to get the value of it. There's just interesting. I have a big, I would say, from a preparation of the podcast and client work, leveraging these tools to gather data, to ask better questions, to be prepared. Everything's speeding up. That's very, so I don't want to come across like a Luddite here, but there's
No,
like
I think
against it or something.
absolutely.
But
No,
I'm curious
aiming
if,
to use it. You
you know,
have to use it, but I think it's really evolving. This is really the first phase, really, of how we're going to interact it
so you're seeing a
with
lot of
it in our
investment. You're
jobs.
seeing a lot of investment into it with these large companies. That's very great data. A lot of investment, but it's still early to see the productivity, the lagging indicators from all of that in these companies.
Exactly.
And
Well,
so
how is
and
it going to
so, okay,
impact the labor market? What does productivity gains look like? Profit margins look good for companies. Are they going to go through the roof because they had 20 people in marketing and now it's three? We haven't seen
question
any
mark.
of that yet. I don't know how that, exactly plays out, but I think that's the next iteration of what will happen down the
That
line.
sounds like a really exciting time to get in the market, like be an investor.
I mean, I think it's a fantastic time. I don't think we want to time the market too much here, but you know, I
Yeah.
I write a quarterly outlook piece, and you do the same thing, Jay. You go back. What did I write? What did I say? Kind of review.
Yep.
What was I right about? What was I wrong about? we've been pretty consistently bullish over the last 18 months. Don't see much to change. Obviously, we're not giving advice here. August is seasonally weak quarter. I mean, weak month for the market. So we saw a VIX spike Friday. We'll see, if we chop around here a little bit, but it is a very exciting time to be an investor, especially in this economy right now. So although we have a lot of things to be concerned about, I think the overarching guidepost is best for the long term and we should be okay.
Would you say early mentors that were impactful in your career?
Now, I mean, there was, I had a couple good people on the trading desk that would look out for you. Coming up in the late 90s, early 2000s, everyone was incredibly busy. I would say managerial style, like we talked about before, Jay, is, you know, manage opposite of a lot of most of the people I work for on Wall Street over the years. So pretty loud, cantankerous, edgy setting. It's probably not conducive in 2025 for, you know, managing, firm, but helping manage a firm. So I think I, took a lot of lessons. Hey, if I ever get in this position, I would definitely not do that. So I think, had a couple of good older guys on the desk to help me out. And then as far as management side, took cues on what not to do from a lot of people.
Mm. Yeah, have you ever always been observant of people? And do you think that's a good or that's a necessary, a helpful, an important component of being an advisor?
I think it's a important part of being an advisor, and I think it's an important part of being in the working world. You know, great. I'm an advisor. Obviously, we're in a sales role. My previous life, we were in a sales role, but I think if you're if you're in any corporate environment and have a job, you're in a sales role. Right? You're dealing with clients, you're dealing with vendors, you're dealing with customers coming into your store. You're dealing with employees, you're managing up. You have supervisors, they have supervisors. So I think you always have to take those cues and understand how to manage people or at least observe, hey, what's going on here. So I think it's an underrated quality on how to go about the working world.
What are your thoughts on culture?
It matters, but it really does. It's everything. I mean, it's a big, everybody says it, right? But do they follow through on it? And to me, that's the key because talk is cheap. Somebody could tell you, your boss could tell you culture matters, or president of the firm could tell you that, and then, the next day they're laying into the cleaning person. Then that goes against everything that you just said. So I think it's being consistent, leading with your actions. Your actions show everything. Decisions you make show that culture matters. It's not just what you say. So you truly have to live it. And if you don't live it, then I think people are smart enough to see it right away. And then to me, that's even worse than not saying it. You say it, don't do it. It's almost worse.
That is mic drop right there. I'm inspired by your morning core, and it's a great example to set to show up every day and leave it on the line. So I really thank you for that. And I'm glad to be subscribed to. If you're listening to this episode of the Culture Matters podcast, follow well, you said your email. Can you say that again so we can
Yep.
get in that
And Lampone at pinevalleyinvestments.com.
and follow our friend Nick Lampone on LinkedIn as well. I follow him there. Get connected with him if you want to learn more about your future around your long-term wealth building. He's a wealth of knowledge. Thanks so much for coming on the Culture Matters podcast. And I promise I didn't pay him to say that last statement about culture. He's just the real deal right here. Thanks for coming on the show. I've learned so much, and I can't wait until next time. It's glad to know that we're in business together.
This was awesome. Really had a blast, Jay. Thank you. Appreciate it.
Please share this with a friend if you're listening to this, someone that you know really needs to take their finances seriously. And we will see you next time on the Culture Matters podcast.